Hi everyone. Today is Monday, May the 19th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We'll start by taking a look at the futures here, as always. The EMini S&P 500. The ES had a pretty wide range relative to the last several days, right? We'll notice if we look to the left, we can see some very tight compression moves. And then last night we had an expanded formation. The big things happening over the weekend, the Moody's downgrade in the U.S. debt, neither here nor there really. Probably all the global all the global countries are going to get a debt downgrade. But this bill that we have is going to be more spending. And, that's what politicians do. They spend so that people will vote for them. Not trying to be political, but, it is how it is. No matter what, this is what we have to look at. So there is a little bit of an issue that we want to think about when we look at these things. All right. First of all, I do want to remind you that underneath in the description of what it is that we do here in the morning, I have price setups, targets, opening ranges, what I suspect the charts are going to do, and so on and so forth. So you can log down there after you've watched the video to go, okay, can I cut and paste here and see what levels I need to look at? Just trying to make it more simple for us. Okay, so what do we have to look at? We've got a structural wave that I've got beginning, let's move this properly to those highs. I've got a structural wave that begins from the high of May 13 to the low of May 15, right? We sit in a sideways formation. We broke structure. Remember, it's always about bouncing higher, breaking resistance, pulling back, and holding a higher support. So literally, this did not happen until about 3 a.m., on the morning of May 16, and it gave us another shot during the trading day at 10 a.m. Eastern that took us right up to, where did we go here? Just shy of the 200 Fibonacci. So we rotated back down at the end of the day. That's created a new wave for us to look at. And so I'm looking at the wave structure, the market structure wave from the low of May 15 to the high of Friday, May 16, right? And we can see from this wave, hang on a second, let's get that right. We can see from this wave that we've got a lot of noise sitting in the opening range. So a lot of traders back and forth. See this box of noise? Chances are, if we get inside of this box, and that is above 5,921, we could easily go back up to 5,930. The dip bounce in the opening candlestick formation, if you look at very tight cycles, it was a nice long. I did try to get in there last night, did not leave my stop wide enough. That was truly an error on my part, but it moved right up into the close of Friday. Important line in the sand. That close of Friday looks like 59.47. It's an area that we need to stare down, but not significantly. So the question is, what does the trend tell us? And in this space, we are in a rotation that is looking for support below. So what might that be? Let's see. Let's look at where the 63 is. Okay, we've broken that. And let's see where the 100 is. We've broken that. 200 well below. Okay, so charts still looking for support. What's the slope of these averages? Up to flat, and up. So what this tells us is we're still in a by the dip formation. I've got Linda Raschke's oscillator down here, and it looks a little bearish, but coming bullish. My thought would be the following. Low of the opening range just rejected, so there's a potential short here, but we have to lose the opening range high of 2 days ago, and that number is 5,904. Okay, if we can't lose that, we've still got bullish action on the horizon. We'll move to the top of the range. That's really super messy. What would I like to look for? The implied volatility for today gives us a low of 5887.50 and a high of 5974. That gives us a pretty wide sideways patch, but we did bounce just shy of it. It actually moved at the 50% area of this wave, which seems normal. Remember, the big picture is here's the market structure. It breaks, moves to the top. If it comes back in, that 50% area is going to be the support zone. So what I would like to see is a pullback to 5,897. That would make a long structure for me. Still 10 points of risk into the implied volatility move. So risk is a little bigger today. I would use micros, certainly, and then see if we can bounce back. First target, 5904. Second target, 5920. Third target, 5940. Okay, so that's what I'm staring down. Above 5940, going to get a little dicey, but if we breach 5940 and pull back and start showing higher support zones, we would have broken the market structure of this tiny wave that began at the high of 5947, pulls back to 5891 or so. That structure will have broken, and we would be moving up into the higher structures above at 5954. Could be a couple of days of motion, could be today. We've got some volatility intraday, but I do know that the powers that be are trying to tamp down on this volatility and keep price action moving positive into the bill that's coming to the House. Yes, I know. Market shenanigans, but we live, we learn, we move on. Okay, let's move on to the EMini NASDAQ 100, another space that we should be looking at micros to trade. The same levels are going to work inside of the micros as the minis, so not to fret about that. Remember, we're not looking at exact levels. We're looking at regions that we want to see support move. Okay, so what's the structure on the 1 hour formation for the NQ? 63 moving average, up to flat. 100, up in general. So what does it tell us? The trend is up, but they're looking for support. Look at where it comes in. This is the measured implied volatility move for the option chains at 21,119. Charts began to bounce off of the zone. Where are we going? Well, here's the thing. Hard to say. The super trend has us moving down. So easily we should test the bottom of the opening range at 21,270. That's the first potential short, but the risk is wide because if we get into the top of the opening range, the bottom of the opening range, we could easily go to the top of the opening range at 21,374. If you want to look at the tiny structural breaks, this high at 21,418, low 21,194, holding above there gives us motion because we have higher lows that we can walk up into 21,300. My thought is if we lose 21,119, it's going to push the traders lower into 21,000. Now, you see I have the targets. Excuse me for my voice getting all throaty there. You see I've got the targets lower sitting here at that 21,000 zone. Do I think it's going to go there? Not particularly. But if it loses this 21,120 zone or 21,119, we do run the risk of having lower structures come in and take over because the traders will have the squeeze that will force them. Implied volatility moves for the week show us down at 20,800 and the high at 21,783. This, look at the motion here. See the big box we're caught in? It's a really big box that is literally 600 points wide, thereabouts. So we need to be careful. I do suspect they're going to try and buy these dips. However, it could be a very messy day, particularly if we lose the support structures. All right, let's take a look at the EMini Dow Futures. This one looks a little bit messier, doesn't it? Very wide opening range. Target zones, extensions to yesterday's high, 42,790, coming right into the lows here. Notice that's the move that I anticipate for today. Old resistance, new support, collision of the 63 and the 100 moving average at 42,303. What do I think is happening here? My suspicion is a bounce that creates some selling pressure. Notice the flattening of the super trend here at 42,600 or so. That is the risk line. If it bounces above that, price action will begin to shift. We're right in between the zone here. And so my thought is the first group of traders, notice, this is the high of the opening candlestick from May the 13th. We'd been rejecting it on the hourly all day. So as long as we continue to do that, price action certainly shows sellers up there. But the higher lows tell me that the pullbacks into the opening range at around 42,440 gives us the buy zone up into first 42,560 and then 42,619. Looking at a 4-hour chart in the NQ, you can see the trend action is still very bullish. We broke market structure up here at the breakout of 42,500, but we're inside of that structure break once again. So it's a coin toss. Levels below at that 42,300, 42,400. I know that's 100 points. I'd be using micros if you're looking for the longer trend to do something here. Could have a pretty sticky day ahead. Let's take a look at oil. A lot of cross currents in oil right now. Anas Al-Haji, and I hope I'm saying his name right. He is an oil guy that's extremely well respected. He believes that oil is going to have itself a little bit of a bullish run. Not inclined to disagree, although the wave action is still very wide. So here we have, wow, I did not move this. Strange. I forgot to move our formations for the opening range trade. We're sitting inside of this great big candlestick. Notice it loses the opening range, and then where does it test? The high of the opening candlestick formation from May 11, serving as an absolute floor on this. There's way too many candles, way too many lines here, making me a little bit crazy. So let's just give ourselves one moving average to look at. The 63 down, right? Obviously, price action is looking for some measure of support. Super trend formation, I showed you that on Top Step X last night. You can see it's still bullish. There's the flat line area. So as long as we hold $61.43, we've got upside pressure here into 63. Implied moves are fairly wide, right? Fairly wide to the upside. The opening area also wide, but we've got ourselves some bullish action for sure. That as long as we hold 61.56 or so, price action is going to be bullish. What would I do here with a cross current? Linda's formation says it's negative but rising. The cross current still tells me my bounces are sell zones in here. So I would not be holding for a big fat breakout in this formation. My target zone would be 62.77. If you want to leave a runner for crazy things that might happen, today's implied vol move is all the way up at 63.91. Low taking us at 60.22. That's on the weekly. These guys are in reverse. And so that's what we're staring down. You could have a range trade here where you buy the dip and sell the spike, or you sell the spike and buy the dip. But fairly landlocked with a fair bit of cross current that always tells me that candlesticks are going to retrace each other. Let's take a look at gold. Gold, very big opening range, implied volatility, also very wide. Wow, I forgot micro Bitcoin. I'll do it after this one. Here we have an opening range break to the upside that cannot get above the high of this last wave. So to me, it merits just taking a peek to see where the 50% range is. It's the bottom of that opening range. And so we are still inside of this broader market structure, which is inside this broader structure. So we've got price compression. What does that tell me? There's a big move coming in gold. At some juncture, it's either going to rocket to the north or fall to the south. Thanks, Captain Obvious. What we just have to do is be prepared for the price action event. The opening range candlestick high is $3,255 for Friday. Opening range candlestick low is 3,239. Notice we're trying to hang on there. So if you're thinking to yourself, I want to go long, this is a great place to stagger in a trade, but the entire opening range becomes your risk unless you just want to clip it eyeballs wide at 3,224, which is a pretty important level. Hogue mentioned that level last week, 3220 to 3224 as the stop, or you could just wait until it comes into the middle of that range and buy 3226 and position your stop. Still, I'd use micros, very wide area, right? That's 1,000 points of risk, all the way, $1,000 of risk, excuse me, all the way down there. Pullbacks should still be buy zones, right? We've got super trend showing up, and the break, the ledge of that area where we shift from buyers to sellers looks like 3,220, which makes that position for long much more appealing than trying to go long at the top of the range 10 points higher, 20 points higher. All right, so that's my thought. What would I like to look for? I want to see these range break areas, right? I want to go to my 50% zone on one of my Fibonacci's measuring the market structure. It also happens to be the flat side of the super trend. That's how we tell where the super trend says support is sitting algorithmically. That also looks like the test of the 50. You know, we could move all the way back down here, but I still expect it to be, in general, higher lows because we have not broken down out of the bigger structure. Let's go to micro Bitcoin. My apologies for missing. I know I normally put that after the YM, and I just lost the bubble on it. So last night, things looked absolutely bullish on market kickoff on Top Step TV. And so some folks were saying, hey, 110 looks like it's next. Potentially. Look at the range. You see we're inside the box? This rectangular region is where we're landlocked. That is the edge of that market structure event. Notice it broke out. Look at where it went to. The implied volatility measure. I put this in last night. Overnight at about 8 o'clock, it slams into that vol move and then completely reverses, breaks the daily implied vol, and it's now rejected it. So what does that tell me? It tells me that the buyers are flat-footed here, and they're flat-footed because they anticipated the break, and now they're holding for the bottom of the range, which is 101,300, 101,300 in micro Bitcoin. That tells us they're going from the top of implied vol to the bottom of implied vol, and they're going to sit in the range. Now, we anticipate this is the motion. Don't get yourself here and go, okay, I'm going long. That's not how you use implied volatility measures. What you do with implied volatility measures is you watch it into the target If you're trading with trend or you're trading the range, you buy the dip in the direction of trend, and when it gets into the target, you take some profit. Now, if you decide you're going to go support to resistance based on this prior formation, you would have taken profit at 106,300 or so. And if you like to leave a runner, it moved up. The second it starts rejecting that implied fall move, you move back to the market structure, you watch it lose the level, it's back in the opening range. You know, if you lose the top of the opening range, first place you test is the middle of the opening range. Second place you test is the bottom of the opening range. You get to walk the market structure right back down. Notice super trend, almost exactly where the base of the opening range is, tells us underneath there, we've fallen back into these zones. And so this flattening edge below here at 101,700 tells us, hey, we might have a structure here, but we're also coming into the opening area, the opening candlestick from May 12th. You might go, holy cow, that's a lot of lines. Whenever you see a structure that's got a lot of lines in it, opening high, opening low, opening high, opening low, implied vol, moving average going straight through everything, it tells you it's in a range. So don't think, hey, I'm just going to do X, Y, or Z. If you go, okay, I'm going to short this and take it down here, we got nothing to tell us that that's a really solid trade without a fair bit of risk, right? Especially since momentum, although rising, is still down. It's got to break over the structures and recover. So what are we looking at? 1, fails to head lower. 2, tests resistance. 3, comes back, holds a higher low. We got to wait until that candlestick closes, right? That's what we have to do. So far, micro Bitcoin caught in a range. Deep dips, you want to watch for congestion that holds. Deep spikes, you want to watch for congestion that fails, and it'll put you right back into the range. Let's head on to the SPY. Opening range formation, this is clearly by the dip. Clearly, this is by the dip formation. Structure, heavy congestion, implied volatility move, $584 on the low side, $590 on the high side. You know, this tells us that we're very likely to have a range-bound day, but I don't know if these vol traders are sitting on the side of, you know, hey, here's my over-under. I would not be surprised if we have range expansion. I would not. So you want to be super careful if you're thinking about shorting on the edges of these implied vol moves. For the weeklies, implied volatility high, still near around 597. Implied volatility low on the week, 578. Okay, this has been by the dip. What is the motion? 50 is up. We just lost it. Low of the opening candle at 4 a.m. gives us a bounce pass. What is that? Top of this structure. Old resistance, new support. You're going to have some noise here. It's a place to take profit if you said, hey, I'm going to buy the low of the opening range retest and I'm going to leave my stop at 586, right? That's going to give us a space where we go, I need to take some profit and I'm going to watch the price action move to the north. This is what I think is going to happen. Price action is going to continue to the north. I expect a lot of shorts to be caught flat-footed again because there are all kinds of, let me pull out my tinfoil hat, all kinds of things going on. This market needs to stay up so that bill has a better chance of being passed. And that's the government spend bill. But, you know, never underestimate the powers that be. Okay, let's take a look at the Qs. Not as strong. This is pretty important. Everybody's like, ooh, tech is back. Listen, tech's never going away, right? The valuations are the things that we need to be concerned about. But we just broke trend here on this upward trend line that collides right up over the implied vol move for today, which is $518 in the Qs. $525 for the upside of implied volatility, $503 for the downside weekly implied volatility. For the day, We are looking at $509.50, thereabouts, all the way to $518. What's the trade here? Well, the trade is they're trying to recover this 50, that's very upside. So in my mind, the trade is buying as close as you can to 512, leaving about 15 cents of risk, 30 cents of risk, and taking the long into the top of the 50 simple moving average on the hour. That gives us 517 to 518. That would be the implied vol move for the day to the upside. You take some profit, raise your stop, Bob's your uncle. All right. Hey, good luck trading today, and I'll see you on the streams.